Commerce Alive today presents
Claire's. What became the Claire's Stores Incorporated of today emerged from two entirely separate companies. Schaefer formed a company named Fashion Tress Industries in 1961 to service the increasingly popular wig marketplace in the South. FTI's quality hair pieces were a success with women of the early 1960s, and the company eventually became the world's largest retailer of fashion wigs. Meanwhile, in the Midwest, a small chain of retail outlets named Claire's Boutiques began selling a wide range of accessories from necklaces and earrings to evening bags and pins. Catering to women and teenaged girls, Claire's Boutiques had tapped a rare market niche when times were tough and people had little to spend. Women and young ladies could purchase a few trinkets and accessories to make an old outfit seem brand new. In plush times, these same consumers continued to enhance their wardrobes by purchasing accessories for both old and new outfits. By the dawn of the 1970s, America's fashion trends were changing and women began to turn away from wigs and concentrate on their own tresses instead. As demand for wigs waned, Schaefer looked into diversification and founded in Claire's Boutiques. Based in Chicago with 25 retail outlets, Claire's was still a relatively young enterprise yet with tremendous growth potential. Schaefer bought the Midwestern chain and changed his company name from FTI to Claire's Stores, Inc. in 1973. The transition from wigs to accessories proved relatively smooth, and despite some rough times in the early 1980s was a success. Yet few imagined just how successful the Claire's stores would become in the next decade and a half. By fiscal 1985, sales for the Claire's chain reached $55.9 million with net income of $6.6 million. The following year, sales climbed to $74.5 million, income to $7.5 million, and stock traded as high as $15 on the New York Stock Exchange. Although sales continued to climb for fiscal 1987 to $87.2 million, net income fell to $5.3 million, an indicator of difficulties to come. Yet from sales alone, Claire's appeared to be on the run, when fiscal 1988 hauled in $103.4 million in sales, and income was back in the black to $6.2 million. Even Claire's Stores stock held steady at $13, until fiscal 1989 when it plummeted to $2 despite strong sales of $127.3 million and income of $7.1 million. So what had happened? During fiscal 1989, Claire's ambitious expansion plans took their toll on sales after a burst of openings and the acquisition of the Japanese chain Topkapi 16 stores, bringing total stores to 580. Same-store sales and earnings floundered in red ink during the spring of 1988. Yet Schaefer, aware of the too aggressive expansion and a temporary loss of control over his ever-growing empire, tightened the reins and initiated a turnaround by the last 2 quarters of 1988, with Claire's Stores stock regaining some of its luster by the end of the fiscal year. Part of the company's turnaround was the implementation of a $5 million chain-wide state-of-the-art computerized cash register and inventory system that linked Claire's stores with headquarters. Daily data capture rose to 99% as opposed to 70% when performed manually by the Claire's staff. The computer system and the hiring of Claire's Stores' first director of loss prevention further improved the company's numbers by reducing shrinkage or theft of the thousands of small items available in each store, with the company keeping this figure to 10% or less. 1980's excess figure was as high as 12% of sales. Lastly, an increase in Asian imports accelerated gross earnings. And new management selected by Schaefer completely stopped the company's hemorrhaging before any long-lasting or irreparable damage was done. By May of 1989, 3 months after the end of the previous fiscal year, Claire's posted an incredible sales surge of nearly 79%, with same-store increases of 58%. Though the company continued expanding, it did so carefully, and by July had 650 outlets in 47 states with some 4,000 employees, nearly two-thirds of whom worked part-time. Claire's finished the year, fiscal 1990, with $190.2 million and a very healthy $19.5 million in net income. Sales for fiscal 1991 increased 35% to $255.2 million, and income was up to $20.5 million, partially due to a 7% rise in same-store sales. The company's stock was up again too, trading at about $14, almost as high as 1985's all-time high of $15. Claire's hoped to add between 125 and 150 new stores by the end of the fiscal year and had even revitalized its ordering system to keep a better tab on trends and delivering merchandise to its stores in far less time. By the spring of 1992 there were a total of 1,006 company-owned stores in 47 states. Of these, 721 were Claire's, 113 were Topcopy, 32 Dara Michelle, 32 Arcadia, 20 Art Explosion, and another 90 under the name Artworks or Picture Show. The latter four chains were a departure from Claire's store's general trade in women's and girls' accessories. Arcadia and Art Explosion stores were considered trend gift shop, stocking calendars, mugs, t-shirts, seasonal and stationery items, unframed posters, and other quick sale products with a price range from $1 to $75 and an average sale of between $5 and $10. Artworks and Picture Show outlets carried graphic arts, such as framed posters and many other types of matted and framed artwork. The end of the year, however, brought a vast turnaround as fiscal 1992 sales fell to $234.2 million, and Claire's suffered its first loss since 1981. Led by a same-store sales drop of 11%, the stunning loss of $8.7 million was blamed on several factors, including too rapid expansion again, such as ill-fated stores in outlet malls which proved redundant, markdowns on excessive Christmas and Easter inventories which in turn compounded the problem by tying up space and keeping new merchandise from the shelves and racks, the discontinuation and disposal of the costly graphic arts line of stores Artworks and Picture Show for a sizable hit of nearly $12 million, and lastly, the cost of increased security as Claire's introduced cameras and locked display cases to lower theft rates. While the company made adjustments to shore up losses and promote sales, Schaefer also looked into diversification. One option was a mail-order sideline with slightly higher-priced items. Another was to duplicate the successful $130,000 prototype store that Claire's had opened in the Pembroke Pines Mall near headquarters, filled with black marble, mirrors, plenty of bright neon, mannequins, and several upscale items like earrings with a price tag of up to $50. Despite its difficulties in the early 1990s, Claire's was still considered a cash cow with some $22 million in cash in fiscal 1992. Additionally, Schaefer, who had long passed the traditional age for retirement, sporadically talked about leaving the company or finding a buyer for his 41% share of Claire's Stores Incorporated. If those on Wall Street were concerned, few showed it, for Schaefer was well liked and respected throughout the industry, and most knew he would never leave his company unstable. Fiscal 1993 brought good news as sales rose to $248 million, and income was back in good form at $14.5 million. By July, total stores grew to 1,060 in 48 states. Fiscal 1994 proved another successful year for Claire's with $281.7 million in sales and income of 7.9% or $23.6 million. Costume jewelry, generally Claire's store's biggest selling item, dominated the company's bottom line once again by accounting for $180.3 million or 64% of total sales. The same rang true in fiscal 1995 when costume jewelry sales reached $196. $1 million of the year's $301.4 million total sales, with income at 9% or $23.9 million. Yet 1995's fiscal figures once again brought a red flag as same-store sales decreased 2% due to what the company deemed as the lack of a discernible, significant fashion trend. Near the end of fiscal year 1995, the company bought a $7.4 million new distribution facility in Hoffman Estates, Illinois, a suburb of Chicago. Claire's Store's other distribution facility, originally leased in 1985 and located in Wooddale, another Chicago suburb, continued to service the company's merchandising needs up to 5 shipments weekly to individual stores, with the exception of imported goods like tote bags and costume jewelry, until the new facility was ready in June 1996. In January 1996, just prior to the end of the company's fiscal year on February 3rd, a 3-for-2 stock split was declared by the board of directors in the form of a 50% stock dividend distribution. 9 million shares of common stock and 653,807 shares of Class A common stock were given to stockholders of record. Also in January, the company moved forward with the first of 3 major acquisitions, 2 in the United States and another in the United Kingdom. The first of the U.S. purchases, which counted towards fiscal 1996, involved assets from the Icing Incorporated, which had filed for Chapter 7 protection. Assets included 85 property leases in prime locations, retail equipment, fixtures, and furniture. After remodeling, Claire's planned to reopen the stores by May as either Claire's Accessories, if no other Claire's store existed in the mall, or as a refurbished The Icing, if a Claire's store was already in operation. The second acquisition was a British fashion chain known as Bow Bangles, plc. Purchased assets included 48 stores throughout England, Scotland, and Wales, as well as related fixtures, furniture, and equipment. Lastly, in April 1996, the company acquired a third chain, Accessory Place, Inc., taking over 31 stores. This brought Claire's Store's total number of outlets worldwide to over 1,500, with plans to open another 150 locations before fiscal 1997 ended, between 15 and 20 in Canada, 110 to 115 in the United States, and 30 more in Japan. Of the 1,500 stores, 142 were Claire's Accessories stores, with each averaging 919 square feet in enclosed and open-air malls. For a startup cost of about $95,000, using specially designed display systems, each Claire's Accessories store was ready for business within 3 months, a relatively short time in the retail industry, and well-stocked in women's and some unisex fashion accessories, usually in excess of 6,000 pieces of merchandise like costume jewelry, bracelets, earrings, hair ornaments, necklaces, pins, etc., purses, sunglasses, tote bags, some trend gifts, and ear piercing for a small fee. The other company-owned outlets under the Bow Bangles, Dara Michelle, The Icing, Accessory, and Top Copy names often operated within the same malls as Claire's Accessories stores. This clustering of stores in successfully tested geographical areas kept administrative supervision costs to a minimum and made it easier for refurbishing stores, which the company did on a regular basis. The second acquisition was a British fashion chain known as Bow Bangles, plc. Purchased assets included 48 stores throughout England, Scotland, and Wales, as well as related fixtures, furniture, and equipment. Lastly, in April 1996, the company acquired a third chain, Accessory Place, Inc., taking over 31 stores. This brought Claire's Store's total number of outlets worldwide to over 1,500, with plans to open another 150 locations before fiscal 1997 ended, between 15 and 20 in Canada, 110 to 115 in the United States, and 30 more in Japan. Of the 1,500 stores, 142 were Claire's Accessories stores, with each averaging 919 square feet in enclosed and open-air malls. For a startup cost of about $95,000, using specially designed display systems, each Claire's Accessories store was ready for business within 3 months, a relatively short time in the retail industry, and well-stocked in women's and some unisex fashion accessories, usually in excess of 6,000 pieces of merchandise like costume jewelry, bracelets, earrings, hair ornaments, necklaces, pins, etc., purses, sunglasses, tote bags, some trend gifts, and ear piercing for a small fee. The other company-owned outlets under the Bao Bangles, Dara Michelle, The Icing, Accessory, and Top Copy names often operated within the same malls as Claire's accessories stores. This clustering of stores in successfully tested geographical areas kept administrative supervision costs to a minimum and made it easier for refurbishing stores, which the company did on a regular basis. Although the first quarter of fiscal 1996 found same-store sales lagging, a turnaround began in April and continued. By the third quarter in October 1995, Schaefer and the company's management were jubilant over record sales and earnings. Stating that the year had proved to be everything we expected it to be, Schaefer further explained that customer traffic was excellent, average sales were higher, promotional costs were under budget, and markdowns had been unnecessary. Claire's stores finished fiscal 1996 with $344.9 million in sales, an increase of 14% over the previous year, and income of $30.9 million, including a rebound in same-store sales to 3% instead of 1995's decrease. Costume jewelry sales remained strong at $244.9 million for about 71% of sales, 6% over 1995 and 7% over 1994. The Icing 85 stores and Accessory Place 31 stores, in 1996, and Bijou 1, a Swiss chain, in 1998. The Icing would become the company's primary brand for women in their 20s. In 1999, Claire's purchased Cleopatra, a chain in Paris with 42 stores, for $11 million cash, as well the American chain, Afterthoughts. Afterthought stores were converted to Icing stores after they were purchased. In 1997, the business changed its name to Claire's. In 2001, Claire's.com was launched. In 2002, the company purchased the US-based clothing chain Mr. Rags. Claire's was a publicly traded company listed on the Nasdaq in 2005, but was taken private by the private equity firm Apollo Global Management in a $3.1 billion leveraged buyout in 2007. In 2008, Claire's consolidated its European operations into one group with headquarters in Birmingham. The first stores in Ukraine were opened in 2010. In 2011, e-commerce operations were launched in the United States, alongside the opening of stores in India and Mexico. In 2012, Claire's expanded its international presence by opening its first stores in China, Italy, Indonesia, Luxembourg, Dominican Republic, Panama, and Honduras. In 2018, Claire's filed for Chapter 11 bankruptcy in the U.S., with plans to shed a majority of its debt. The company blamed a decline in consumer demand and online and physical competition as a result of the decision. The company planned to shutter nearly 100 underperforming locations as it tried to eliminate debt with the help of Elliott Investment Management and Monarch Alternative Capital. By 2022, Claire's had exited bankruptcy, announced preliminary sales growth for fiscal year 2021 of 53% on revenue of $1.4 billion, and announced plans for an initial public offering. The company's new strategy involves shuttering stores in underperforming locations in favor of prestige malls, as well as setting up kiosk shops within drug and grocery store chain. On July 9, 2025, Claire's warned that it would be considering Chapter 11 bankruptcy protection for its U.S. operations for the second time in 7 years. The company blamed declining consumer demand, rising import costs caused by President Donald Trump's U.S. tariffs, and heavy debt as a result of the decision. Houlihan Lokey, an investment banking services company, is negotiating with Claire's to improve financing and explore the sale of some or all of its assets, including international operations. While Claire's has interested buyers for its European operations, they have refused to identify names as the information is confidential. On July 24, 2025, Claire's put its French operations in receivership by the Paris Commercial Court. By August 4, 2025, it was reported that Claire's had failed to pay rent at many of its locations throughout June and July. The company also warned that a Chapter 11 bankruptcy filing could happen as soon as the end of the week. On August 5, 2025, Claire's filed for Chapter 11 bankruptcy for the second time in 7 years, listing assets and liabilities between $1 billion to $10 billion, while also filing creditor protection under the company's Creditors Arrangement Act in Canada. Claire's announced the closure of 18 stores, mostly located in dead malls, with stores to close by September 7th. That same day, as part of a deal with a liquidation firm, Claire's announced the closure of all of its 326 U.S. locations across both its namesake and icing brands, unless a buyer is found for both brands. Liquidation sales are expected to start within a few weeks and stores are expected to close by October 31st. On August 6, 2025, Claire's announced the definite closure of 700 locations nationwide, including all of its namesake stores located in Walmart stores, as well as the discontinuation of the icing brand. If a buyer isn't found, the company may move toward liquidating its entire North American footprint of roughly 1,500 stores. On August 13, 2025, Claire's went into administration in the United Kingdom and Ireland and filed for bankruptcy in Belgium. Its German, Italian and Austrian divisions are also expected to file for bankruptcy and wind down operations. This puts over 2,150 jobs at risk across 306 stores. On August 20, 2025, the company announced it would sell the North American business and IP to private equity firm Ames Watson Capital. Could this be the sign of the end of the company? Only time will tell if it will survive the next 5 years or sooner.
If you have any fond memories, please indicate it at the comments below. Thanks for watching, subscribe and like.